Good morning. This is Business Live with me, Ian King. Recruitment activity across the UK is continuing to weaken, according to the latest job survey by KPMG and the Recruitment and Employment Confederation. It found that starting salary inflation is at its slowest rate in nearly 3 years, another indication that the jobs market is stalling. Well, joining me now to talk about this is Kate Shoesmith. She's Deputy Chief Executive at the REC. Kate, welcome to you. Which sectors has hiring activity slowed the most dramatically?
What we're seeing at the minute, Ian, is actually something of a stretching across all the sectors. So the lowest ebb, construction and retail, definitely lower demand and not recovering from the pandemic in the same way as other sectors. At the top end, engineering's flying, really high demand. So it does depend on where you are in the UK and the sectors you're working in terms of that jobs picture.
Is there a seasonality to these figures? I mean, you mentioned construction and retail as relatively weak points, but I mean, retail is always a little bit sluggish after Christmas, and likewise, construction during the winter is often quite weather affected.
Yeah, and those are really good points. And they're often used as bellwethers for how are we feeling more generally. So if you think about consumer confidence, are we going to be spending our money? Perhaps not in the same way in terms of house improvements, in terms of going out shopping, when there's a cost of living crisis that's been on most people's heads for quite some time now. And actually what we've seen, and this is where it relates in terms of the wage picture that the data looks at, is that there's a real sense that after a pandemic where the labour market was red hot, businesses in all sectors needing to hire, needing to grow, there's something of a decline there in terms of that business confidence. They're looking for the opportunities to build and bring new people into the business, but without that particular confidence that this is the right time to invest because of the overall economic picture.
I guess the thing that is quite worrying in particular, Kate, is the fact that temporary hiring seems to be stalling, because obviously a lot of permanent hires, if you put them on ice, then an employer will still look to fill the gap on a short-term measure.
And again, that's where you see some sectoral and regional variations, actually. So, yes, this is 1 month of data. And yes, what we did see is in comparison, 2023 as a recruitment picture was much harder work than it was in 2021 and 2022, when there was a real boom in demand and a serious supply issue in terms of just not enough people for the vacancies that are there. Some businesses want to mitigate the economic outlook, thinking about where's the growth going to come from? Did the budget give us enough in terms of the spring budget from the Chancellor to think now is the right time to invest? What does the political picture look like? What's that global picture look like? So yes, you may be hiring temporary staff to that, and sometimes temps are the right way forward. But when it's a case of that overall economic growth picture, you can't see where the silver lining is, what's going to happen next, that's when businesses start to hold fire and really need to be thinking about how do we bring that confidence back to businesses right now so that people want to move jobs and that businesses can grow.
Yeah, meanwhile, the availability of workers continues to expand.
And that's not really such a surprise. So at one point, when we came out of the pandemic, for every job vacancy there was one person of working age population. That means there's a huge problem in terms of trying to fill those job vacancies. So now we've seen demand start to slip away. It's still relatively high. Overall picture is there's just short of 1 million job vacancies in the UK economy right now. But now we're in a situation where there are people who are either facing redundancy or have been made redundant, looking to come back into the jobs market after a period of economic inactivity. So there are changes and shifts going, but what's really required is how do you give people enough confidence that now is the right time to move jobs?
OK, Kate, got to leave it there. Good to talk to you this morning. Thank you. Now, Britain's boardrooms are becoming more ethnically diverse, but are not yet hitting targets set for them by a government-backed review. The Parker Review, launched in 2015 by the Business Department, said that 79% of FTSE 250 companies now have at least one ethnic minority director, up from 67% a year ago, but still short of the 100% the review is aiming for by December. In the FTSE 100, 96 companies have at least one ethnic minority director, unchanged from last year. A dozen FTSE companies now have a CEO from an ethnic minority, up from 7 in 2022. Well, joining me now is David Tyler. He's chair of the Parker Review and also chair of the Household Goods Group, PZ Cussons. David, good to see you again this morning.
Well, good morning, Ian. Nice to see you.
Likewise. I get the impression from this report you're reasonably happy but not turning cartwheels.
Good, good, a good way of putting it. Look, we're making good progress, but there's much more yet to do. That's the summary. And you talked about FTSE 250 companies just then. Well, 79% of those who reported said they had got ethnic minority directors now, which is great. But our target is to get to 100% by the end of December. So although there's good momentum, we need to speed up a little bit over the next 12 months.
I mean, the pace is really going to have to pick up, isn't it, between now and December?
Yeah, there's a bit of a tendency in the past with equivalent targets for there to be a bit of a hockey stick at the end. So we hope it will get close to that and close to where the FTSE 100 companies are. 96 out of 100 there have got at least one ethnic minority director. Many have got 2 or 3.
One of the blemishes, I thought, was that the number of black directors in the FTSE 100 actually fell from 17 to 16%.
You're absolutely right. In fact, the figures are down, though. It's not as high as 17 or 16% in. But you're right. And this is our biggest concern, and we've called it out, that the progress, particularly from a number of Asian minorities, has been really good. And their representation in FTSE 100 and FTSE 250 boards is much in line with the population, their share of the population. When it comes to blacks, there hasn't been as much progress. And so we're certainly saying to companies today, as we have been for a long time, just look at the way you are looking at all communities and let's make sure that if there are any barriers, let's take them away.
But is that an issue with the talent pipeline or with the headhunters who help promote people to boardroom positions?
I think it's a bit of both. There's probably not quite as much talent coming through as there is in the, for example, the Indian community who have done very well in business over recent years. You can see, for example, you mentioned 12 FTSE CEOs. A large number of those ethnic minority CEOs come from Indian heritage. So there does seem to be a difference between communities, and that is something naturally we're a little concerned about.
And on that point, I mean, fewer than half of ethnic minority directors are actually British citizens. We seem to be relying on foreign talent to make up the numbers here, if you
Yes, you're absolutely right. It's 7 or 8% actually are British people. But you see, we have a very international-based FTSE 100, above all, and FTSE 250, still quite a lot of international companies. So very often the right thing to do if you're running a company with a major presence in Brazil or South Africa or India is to have locals there on the board. So they do make up a significant proportion of the total. But what's good is, you know, when we started this report, Ian, when was that? In 2016, when we did our first survey, less than 2% of FTSE 100 directors then were actually British ethnic minorities. Today it's between 7 and 8, so we're making decent progress, but we're not there yet, as I said before.
Things have moved on. Yeah, we had John Parker on the programme at the time.
You did.
One thing that you've done today, which is quite interesting, you're also seeking information now from the top 50 private companies. Yep. Are you confident you'll get the same sort of response that you've had from the quoted sector?
Well, I hope so. Today we haven't yet, but to be fair to them, we only asked this information this time last year, so they had 9 months to produce it by the end of December. So 36 out of 50, 72% gave us our figures. If I look at the women's FTSE leaders group, they do a similar thing with the same companies, and they reported their numbers 2 weeks ago. 46 of these companies produced numbers then. Okay. So I hope we'll get up to that sort of number next year. And for them, there's just as much benefit of having people from ethnic minorities, every part of our society, if they're going to perform well, as there is for listed companies.
Now, you've also put out an appeal today for companies to come forward and say what they think the target should be for 2027. Do you have any thoughts in your own mind about where those should be? Well,
yes, indeed. We actually came out and said that 12 months ago. And a majority of FTSE 100 companies just have kindly already given us a figure. And if we average out that figure, and there's big differences, the lowest are at 5% of the senior management to be made up of ethnic minorities. This is a figure, a target for 2027. and the highest is 45%. So you've got, unsurprisingly, a wide range of targets. Why is that? Because, of course, the locations of where those senior management work is so different. And a major international company or two, and you can think of some that you interview around this table, would have a lot more ethnic minorities. And, of course, companies that are based in London, even if they haven't got anything outside, elsewhere in the UK, have a much larger pool of people from ethnic minorities here than you would if you worked in the North East or in Scotland. So a big range. The target on average is 17% that's come from these companies in the FTSE 100. And today I can tell you for the first time, this hasn't been a figure available before. 13% of the senior management of FTSE 100 companies today come from ethnic minorities. So it's a 4-point improvement, 4 percentage point improvement from 13 to 17 that they're targeting themselves for over the next 4 years.
OK, David, we're out of time, I'm afraid. Always good to see you.
Thank you so much.
Thanks for joining us. Thank you. Some other business news stories for you now. And shares of Currys have fallen by more than 8% this morning after the activist investor Elliott said it would not be making an offer for the UK's biggest electrical goods retailer. Elliott, which first made an approach to Currys last month and which improved its terms last week to £756 million, said it was not in an informed position to make an improved offer for Currys on the basis of the public information made available to it. It said it had made multiple efforts to engage with the Currys board, all of which were rejected. Vinyl records have been reinstated in the basket of goods used by the Office for National Statistics to measure the rate of inflation. Vinyl records, which dropped out of the index in 1992, are joined by air fryers, sprayable cooking oil, rice cakes and gluten-free bread. Items dropping out of the basket include hand sanitizer and hot rotisserie chickens. I'll be joined in our afternoon edition by Matt Corder. He's the ONS Deputy Director for Prices. A British hedge fund trader will go on trial in Copenhagen today on charges of defrauding the Danish state of $1.8 billion. Sanjay Shah, founder of the hedge fund Solo Capital, was extradited to Denmark in December from the United Arab Emirates. He's accused of participating in a so-called Cum-Ex scheme, which involves rapidly selling shares between investors immediately before the dividend payout date to create confusion over who owns those shares and who qualifies for the payout. And the UK-listed iron ore producer Ferrexpo warned today that it needs to extend payment terms on a $58,000 bill from a supplier. Ukraine-based Ferrexpo, which is the world's third largest exporter of iron ore pellets, said that Kaizen, one of its suppliers, had begun creditor protection proceedings against the company and that court hearings were due to start tomorrow. It said it had taken steps to settle the debt, but due to restrictions with the relevant bank account, was not able to provide assurance that the funds would be received in a timely manner. Well, Friday evening's declines on Wall Street were followed by mixed trade overnight for equities on the Asia-Pacific region. The Nikkei fell, however, despite hitting a number of record highs last week. But in Europe this morning, stocks have been trading largely to the downside. Talking points this morning include Telecom Italia. That's fallen by more than 9% in Milan after warning that its net debt will remain higher than expected following the sale of its landline business later this year. Well, here in London, the FTSE 100 is also in negative territory, currently off just over 0.2%, with the mining heavyweights weighing on the index. The biggest fall in percentage terms is Rio Tinto. That's on the back of weaker iron ore prices, while adverse broker comment has sent the wealth manager St James's Place down 2.5%, a company much in the wars lately. To the upside, Imperial Brands is up some 2.5%. That's after another share buyback programme has got underway this morning, while the insurer Admiral is up by 3.75%. That's on broker comment. Outside the FTSE 100, the Intertealer broker TP ICAP is up 4.5% just now. That's on reports it's about to spin off its data unit, while the cybersecurity firm Darktrace had a really good run over the last few days. That continues to win support after last week's results. It's up some 7% just now. On the foreign exchange markets, well, the pound has given back some of last week's gains. Actually, looking at that, it's pretty much unchanged against both the dollar and the euro. Little movement either between the single currency and the greenback. The oil price, meanwhile, has perked up after Friday's sell-off. Well, I say that, it's in negative territory again right now. It's whipping around a little bit this morning. Brent crude currently changing hands at $81.77 a barrel. That's off just over a third of 1%. Meanwhile, the price of Bitcoin has hit a new record this morning, currently around $71,677. Well, joining me now is Russ Mould, Investment Director at AJ Bell. Russ, good to see you this morning. I mean, I guess the big talking point for a lot of people will be this Currys situation.
Yeah, I mean, we talked about it a month ago, and we sat and talked about it then. Well, what were Elliott looking for? You were buying £9 billion of sales, but wasn't making any money. taking on $1 billion in leases, a pension deficit. So you were slightly struggling for the angle there because it's not as if there were any assets that you could sell. So I think in the end they just thought, yeah, we're paying a very, very low price for something where Alex Baldock's actually doing a decent job in difficult circumstances. So they maybe just thought they could get away with a low ball bid, but the board and shareholders have pushed back. So they've walked away.
Yeah, I mean, you've got to respect the Currys board, I guess, for sort of standing firm to their beliefs.
Yeah, I mean, the offer was raised, but and the shares are still above now where they were before Elliott got involved. So it has made people think a little bit about maybe there is some value there. And we've continued to have bids across the UK market with Matthew Hollywood, Spirent, Virgin Money and DS Smith just last week, in fact.
Incredible. I mean, the point that we talked about at the time is that Currys, even at this valuation, I mean, it's trading hands at a small multiple of sales.
Yeah, I mean, the market cap's a few £100 million and sales are £9 billion. So again, if you can get even very thin margins up that little bit, you're looking at something that's potentially worth a lot more than it is today. And it is, in the end, now, I think, in terms of electricals, the biggest footprint still on the high street or retail parks in the country.
Yeah. Now, elsewhere, a bit of a car crash of a story here. Vanquis Bank, which some viewers will remember as Provident Financial.
Yeah, they'll remember it as, I suppose, a doorstep lender is probably probably not the phrase that they would like to be associated with now. They now describe themselves as near-prime lenders,
yes.
So not subprime. So I think, if you're looking at a credit card's annual rate of, 30-odd%, and, the bank's net interest margins of 2 or 3%, I would imagine their net interest margin's 18%, so you're still dealing with some fairly risky customers, but you're still providing a valuable service to people who maybe can't get credit from a big bank. But yes, the good news was they're making a profit in the second half of last year. The bad news is they're probably going to make a lot less than they thought this year. There's a dividend cut as well last year and this year, and that's down to increased investment in the business, increased loan losses, which is, part of the risk, but, the economy is obviously not easy, and also some lower prices. And they've been caught up, despite their best efforts, in this Financial Conduct Authority investigation into motor commissions. They haven't been involved in that, but they've still got people placing claims and complaints, so they're having to process the complaints, and that's costing them money every time somebody files one.
Yeah, Just Car Finance, I think, was the name of that business.
Is it Money Bar now, I think, as well? So, so they've been caught up in that despite their best intentions. But I remember from the PPI scandal, I had friends who worked at some of the big banks, one of them as a company secretary there. They said that it got to the point whereby some of the banks were like, oh, another complaint, we'll just pay them off because it's just quicker and simpler rather than jump through all of the hoops.
Yeah, it's just dreadful, isn't it? Now, over the weekend, Saudi Aramco reported big drop in earnings, as you'd expect, the lower crude price. So, I mean, it's still an immensely cash-generative business.
It made $120 billion last year, which was a quarter below the year before, but they're paying out $98 billion of that in dividends. Now, the Saudi state has got a big slice of that, so that's very important for them funding their welfare programmes, big city redevelopments in the middle of the desert, which are all, green and ESG approved. But what was interesting is the company is actually looking to increase oil production by 2027 from 12 to 13 million barrels of oil a day. And their message is, oil's going to be around for a lot longer than everybody thinks. We need it to manage the transition while we can get solar and nuclear and wind to a point whereby they're economic and can actually be more efficient and provide a better energy return on energy invested than hydrocarbons can. So not a message everybody will want to hear, but from an economic point of view, you can see the shares haven't done very much because there's no free float, but it's still a wildly profitable company.
Yeah, and who would bet against them, yeah.
No,
Russ,
not me.
Got to leave it there. Good to see you again.
Thank you.
Still to come here on Business Live, could co-working spaces help regenerate the high street? Stay with us.
Yeah, just a little bit more to do, 2 more events, but it's been a very hectic sort of 18 months of qualifying. How do I feel about the Olympics? It's amazing. Yeah. When I heard about it, I was like, oh, this could be a dream come true. So I'm really, really looking forward to what this year's going to bring. Firstly, it was a bit of a shock. I think we felt it was coming for where the sport and the dance was going, but it was almost like a reward and a relief because it provides what we do with a massive definition. And for me, I've always wanted to be the best in the world. In terms of sport, there's nothing bigger than the Olympics for a lot of sports. So for us to have that definition and be able to showcase what we do, to me, it was everything. I remember being around 7 years old, I think it was. Yeah. And I went to, well, firstly, I saw a music video. I never remember which one it was, but somebody was head spinning in the back. And I said to my sisters, because I'm quite the joker, I said, I'll do that one day, watch. We all sort of laughed about it, but a few weeks later, I saw my first ever crew. Back when I started, it was very crew-orientated breaking. Yeah. And I just said, like, can I get on stage? Can I have a go? So they let me sort of jump on, tried a few head spins, probably made a fool out of myself. But I was passionate about it. They saw that. And I kind of, I stuck around them like a lost puppy pretty much for the rest of the day at this fun fair. But I wasn't old enough to yet go to the classes. I had to be 8 years old. So I waited and waited and waited. And by the time my next birthday came around, I was straight there and stuck at it since then. Yeah, I think obviously, like I said, it gives breaking that platform that it's never had before. The Olympics is huge, and I hope that it already is, attracting a sort of new generation, but a new demographic. And people that may not have been interested in it, didn't know about it, are kind of intrigued by it. And you see a lot of kids, you know, dancing on social media these days without actually knowing what they're doing. So it's nice to be able to have that sort of position to inspire and pass that knowledge on, because there's so many amazing people out there.
Emirates premium economy. Maybe one day all airlines will have seats like this. Fly Emirates, fly better.
Welcome back. The failure of well-known department store chains like BHS and Debenhams over the last decade has left gaps on many high streets, with the report last year suggesting nearly 3/4 of former Debenhams units remain empty 2 years after the business closed its doors for the final time. Well, one solution could be to convert these sites to co-working spaces. That's the aim of the developer Oro, which is seeking to convert a former BHS department store in Sutton in Surrey. Well, joining me now is Vibhishan Thirakumar, co-founder of Ori Space. Welcome to you. I mean, with a housing shortage, why not convert all this stuff to residential accommodation?
Because we're talking about the epicentre of communities, and these buildings are really large, and they're perfect to create spaces which act as the centre of communities for people to come to and people to work at. And then those people which we attract to work daily on the high street can then help the businesses that we need on high streets and bring communities together.
But people love living in town centres these days. Is there something about these buildings that makes them unsuitable for residential accommodation?
No, I think it's more about an opportunity, really. If we converted all commercial space to residential, we'd really struggle to create in-person experiences. And I think that's really essential for society. I think we really need community and connection and people to meet in person and experience things in person.
So this conversion on which you're working in Sutton, how much is that going to cost you?
That's going to cost a total of £7.5 million.
And you've announced, you've kicked off a funding round today with a view to raising that.
Yeah, absolutely. So actually all of that project's funded, and we're actually moving on to our third and fourth site, actually.
Okay.
So our new equity fundraise is actually to do with growth and beyond the first and second site.
OK, so your first one was in Dulwich in South London. This one's in Surrey. I mean, can you see this concept working outside London and the home counties?
Definitely. It's what we're most interested in, actually. We really enjoy delivering it to areas where we feel we need it. We definitely think co-working can be so much more beyond people with just laptops. We actually incorporate restaurants and well-being quarters, which have treatment and therapy rooms and yoga studios. So we're much beyond just a co-working space, actually.
Yeah, that's because there are some big beasts in this sector. I mean, only last week we had IWG, the owners of Regus and Spaces, on the programme.
Yeah. I think we're looking at something more holistic and more community-orientated and something more purposeful. So it's less of a replicating building by building. It's more sort of understanding what a community wants and needs and delivering that.
So what sort of things, talk me through the kind of things that you aim to do then?
Yeah, sure. So we always view half the building as public, actually, and only half of it to be co-working and private. And the idea is that we have hospitality, which is a big part of what we do. It actually attracts 50% of the people to the building for us. So, and then we've got the wellbeing quarter, which is yoga studios, treatment and therapy rooms, and things like that. And those three things, it's a seamless experience between those three different things.
And one of them is a Sri Lankan-themed restaurant, which is where your family originally come from.
That's right, yeah. It's called Trinco. And,
after Trincomalee, yeah.
That's right, yeah. So we really pride ourselves on Sri Lankan home cooking. We won a Good Food Award for the last 2 years, so it's going really well, really proud of that.
Yeah, it's having a bit of a moment, Sri Lankan cuisine, isn't it? Why do you think that is?
Yeah, I think it's actually brilliant, and I think it's about time it's had its moment, and it's really fresh, it's really tasty, it's quite spicy, and I think spice is growing in popularity as people's taste buds evolve. So yeah.
And going back to the developments, I mean, do you always seek to buy the lease? You look to take the lease rather than buy the building's freehold.
That's right. Yeah. If we buy the building, that's a lot of capital sort of locked up, and sort of. That's not quite where our value is. So we're more about designing, building and operating. So we opt for longer leases rather than shorter leases, or buying buildings, yeah.
OK. Good to see you this morning. Keep us posted on those new developments. Thanks for joining me. That's it from me for the time being. I'll be back with our afternoon edition at 4:30. Hope very much to see you then. Coming up next, Matt Barbett's back. Don't forget, in our 4:30 edition, I'll be joined by the ONS to talk us through those major changes to the inflation basket. Always something that attracts a lot of information. Do hope you can join me for that later on. Cheerio.
This is Sky News Today. It's midday. The headlines. The former deputy chair of the Conservative Party, Lee Anderson, defects to Reform UK.
Reform UK has offered me the chance to speak out in Parliament on behalf of millions of people up and down the country who feel that they're not being listened to.
The Princess of Wales apologises for editing a photo of her and her children after picture agencies said it had been manipulated. President Biden issues his toughest criticism yet of Israel's Prime Minister as a ship carrying much-needed aid for Gaza remains in Cyprus. Nottinghamshire Police is placed in special measures and told to urgently produce an improvement plan by the force's watchdog. Plus, a special investigations football violence makes a comeback in Europe and police struggle to get it under control. And
Christopher Nolan Oppenheimer.
it is Oppenheimer's Oscars as the atomic biopic scoops 7 awards. Good afternoon. The former deputy chair of the Conservative Party has defected to Reform UK. Lee Anderson was unveiled in a news conference in the last hour or so. He becomes the party's first MP. Mr Anderson had been stripped of the Conservative whip after refusing to apologise for saying the Mayor of London, Sadiq Khan, was under the control of Islamists.
Parliament doesn't seem to understand what many British people want. And quite frankly, some of them need to get out more. I made some remarks a few weeks back about the London Mayor, for which I was stripped of the whip from the Conservative Party. And let me be clear right now, on this stage, I will not apologise. It is no secret that I've been talking to my friends in Reform for a while, and Reform UK has offered me the chance to speak out in Parliament on behalf of millions of people up and down the country who feel that they're not being listened to. People will say that I've took a gamble, and I'm prepared to gamble on myself, as I know from my mailbag how many people in